Ladies and gentlemen, I welcome you all to the Q2 FY24 post-earnings conference call of Brand Concepts Limited. Today on the call from the management we have with us Mr. Abhinav Kumar, Whole-Time Director and CEO. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risks and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly detail us about the performance highlights for the quarter that went by and your growth plans and visions for the coming year. Post which, we will open the floor for Q&A. Over to you, Abhinav.
Hi, a very good afternoon to everyone, and thank you so much for joining this call in such good numbers. So I think Q2 we've had a good result. The markets were good. We've increased our footprints across the channels. So our digital still continues to lead as the biggest channel. But at the same time, it's very, very heartening to see that our offline mix has also, in fact, improved. Our overall share of offline has improved. And we're seeing the traction across all our formats. We've opened a few new stores, and those new stores have also sort of added to not only creating visibility for us, but also solidifying our position in this entire industry. So overall, I think things have been good. And we hope that we are able to continue a similar momentum going forward as well. So I would, we take a lot of, as it is, I think everybody is well aware about the company and everything. So we could straight away get into the Q&A, Vinay.
Sure, Abhinav. We already have a few hands raised. We'll start with Swapnil Kabra. Swapnil, you can go ahead, please.
Hi, sir. Am I audible?
Yes, Swapnil.
So firstly, congratulations for amazing set of numbers. And I really love the advertising campaign that went live.
Oh, wow. Thank you. Thank you.
Yeah. So, sir, I have two questions. Firstly, can you give us some color regarding the store expansion plans that we have for this year and the next year?
So we started with somewhere close to 30 odd stores. We finished last year on 30 odd stores, and now we are already at 36. So we've opened 6 stores. In fact, we opened 7. We had to close down 1 store as well. But and I think we should be able to add another 4 to 6 stores at least by the time we end up this financial year.
Okay. And sir, any plans for the next year?
Yes, so we want to take our store count to 100 in the next, say, 2.5 years. Now I'm at 36, so we can do the maths. We want to take our store count to about 100 stores in the next 2.5 years. That's the plan. So in fact, we are now looking at increasing our penetration, even in the tier 2, tier 3 cities, because I feel that India is growing overall, not only in metros, but there is a lot of potential even in the smaller towns. And we've seen those results. So, one of the reasons for this campaign was also not only to generate awareness about Bagline in the consumer space, but it was also intended that we generate some awareness in the B2B spectrum as well. And I'm very, very happy to share that the campaign has really worked well. We've started getting inquiries, B2B inquiries, franchisee inquiries from a lot of people. And hence, we expect that in the next 3 to 4 months, we should start the volume of stores that we will start opening would be higher than what we've been doing. Till now, we've been very, very judicious in our store opening plans. So we don't take more than 12-15 stores as a target in an entire year. We aim basically that we do a store a month. That's been our thought process and journey till now. But now going forward, we want to increase this, and hence you will start seeing that from next year onwards, we will start opening more stores.
Okay. Sir, can you also update us about the IFF overseas merger? When is it going to happen, and how would the shareholding look like post-merger?
Shareholding post-merger would be, I think we've already disclosed the share swap ratio. It's not a very high share swap ratio. I think it's somewhere around 1:3.5, 3.6. That's the kind of share swap ratio which has been derived. So we appointed a registered valuer, an expert valuer. Submitted the process that we followed was we submitted the next 4 or 5 years plans to them, and the plans also which were submitted, though I'll not be able to share too much of details over here because it's not out yet in the public domain, and we should be filing it the moment we get an approval from the exchange. We should be filing everything for everybody to sort of review and see. But just giving you a gist of it, that we sort of we've taken very conservative numbers for the next 5 years for that company as well, and the valuer also has taken sort of a conservative approach, and based on that, the valuation was arrived, which was presented to the board, and the board approved the same. And hence now we filed it for an approval from the exchange. Once the approval comes, I'm going to be sharing it with everyone.
All right, sir. Thank you so much. I'll join the queue again for more questions.
Yeah.
All the best, sir.
Thanks, Swapnil. We'll go to the next question from Rizwan Patni. Rizwan, you can unmute, please.
Good morning, Abhinav. How are you?
Hi, good morning, Rizwan. Good.
Abhinav, just the follow-up question on the store counts. The previous outlook was, of course, the 100 in the coming 2 years. And
yes,
as per the past 2 discussions we had, it was around for this year 15 to 18 stores. If I'm not calculating the maths, it should be at least 7 to 8 stores by the first half, but it is a bit slower. Any reason for that? Because if we do the maths, it is 23 stores or at least 20 stores a year to go to that count in the next 2-3 years here. So,
see, as I said, that in the first 6 months, we have opened almost 7 stores. So that way, if you'll see, we are there on the track. However, you also need to take calls on certain stores where probably economics are not working out, mathematics are not working out, or there is a mall reshuffling which is happening. Anything of that sort, you might, it's always a give and take where you'll open a few stores or you'll open more stores and you might have to close a few.
Close this one.
So the total store count that you see today is a resultant of stores being closed and new ones being opened. So that way we are pretty much on track. We had thought of, and at the same time, see, I've always believed that I don't take a store opening is a very, very important exercise, right? And I don't take a pressure, or I don't put pressure even on my team that we need to open 15 stores, and now come what may, we have to open 15 stores. All of these, this might result into, you taking a wrong call on a store. And taking a wrong call on a store is more detrimental. It's better that instead of 15, you open 12. But, those 12 are good ones. So we are now, touchwood, an integral part of, so one of the leading mall developers today is Phoenix. And very, very happy that, in such a short span of time, we are now one of the integral part of all Phoenix projects. So they've, any new project that they announce, we are already an integral part of theirs. They give us preferred locations. So, if you go a little consistent rather than me coming and announcing and saying that, oh, we'll open 50 stores this year. I've never believed in that. But to answer your question, yes, we're pretty much on track on whatever we had planned for the year.
Perfect. Abhinav, the next one is regarding the new brands, where the presentation says, and of course you have given some light in the last call as well, that there will be 2-3 new brands. So are we talking about this fiscal year, or it will move up to till you finalize the agreement and will be able to declare, okay, which brands are coming in? What is the timeline we can expect?
See, new brands, as I had said in my previous calls as well, Rizwan, is that new brands are always work in progress, right? So, but these things take a little time. Again, new brands is exactly is in fact more complicated than opening a store in a Phoenix mall, right? There you just have to look at the location, get your ROI right, get your projections right, and then you take a call. Whereas in a new brand, you're getting into a long-term agreement, you're getting into all of this. So it takes obviously all the more time. This fiscal year, I'm not too sure, to be honest. It might, by the time you complete the agreement, by the time you do everything, it is a little time-taking process. So I wouldn't be able to comment whether, or commit rather, that we'll be adding more brands in this year itself. But yes, as I said, it is a work in progress. So we are constantly evaluating brands, constantly in touch with these brands.
Just last question from my side, Abhinav, regarding as we are going with the merger with IF, with the manufacturing unit, and on top we are doing this greenfield project, bought a land and putting a new factory. So. Yes. What is the scale of economy, or what is the thought process behind, as we already have a manufacturing unit which will be doing a merger with, and then you also do a greenfield. So how it is going to scale up the business, and what value we are expecting in the coming period with this capex?
A very good question, Rizwan. This is the fundamental basis on why we decided to merge the companies. So IFF Overseas, if you'll have to understand, IFF Overseas is majorly a backpack manufacturer, right? And as a company, we also realized that we need to get into manufacturing of our own in terms of luggage. And when I say more so, the hard luggage. So when I thought of getting into hard luggage manufacturing, now my team out here currently is not a manufacturing expert. We are the front end guys. We are retail experts. We are planning experts. We are sourcing, buying experts, but we are not manufacturing experts. Whereas we had a sister concern where they have a manufacturing experience for the past 25-30 years, right? They understand the nuts and bolts of manufacturing. Dealing with labor, dealing with productivity and all of that, efficiency, everything is and with those 25-50 years of experience that they have, now I had two choices. One was either I build up my own team in terms of entire manufacturing, and then do this greenfield project of hard luggage, or the second option I had was I merge this company so that I get that entire experience, that entire team. There is a CEO, resident CEO over there, and there's a full-fledged team which is running that company. And hence we thought that it is a much better idea that we bring them in, and then the entire manufacturing division is taken care by that team. Yeah, so that was the whole thought process behind this. And so hence we sort of thought of going ahead with it. And I think in terms of value unlocking, or in terms of how do I see over there, I think India lacks today when it comes to luggage manufacturing, right? There are very few players. It's not like apparel manufacturing where you go and you'll find factories all across the country. So there are very few people who have the know-how, who are into luggage manufacturing. And hence, for a player like us who is already into this category, it made sense that we have our own plant. So when I say as it is a little niche category. As it is, there are not too many factories all around. Yes, now they are opening, but not too many upscale or good quality manufacturing available in India. I personally foresee that there is a lot of upside to this manufacturing. If you get it right, I think a lot of brands that I speak to internationally, they're all looking at. Initially, it was China plus one, and now I hear that they want to completely look at India and completely probably move the base from China to India. So I think manufacturing in India is going to grow as a sector, and more so in our sector. Obviously, it is underpenetrated. So that way, it was a no-brainer that we get into this. I hope I've been able to answer.
Yeah. Thank you so much for this clarity, and best of luck.
Thank you, Rizwan.
We'll take the next question. Before that, I would request all participants to just restrict to 2 in the initial round, since we have quite a few participants. We'll take the next question from Nirav Saxena. Nirav, please go ahead. Can't hear him. We'll take the next question from Devrat. Devrat, you can go ahead, please.
Hi, Abhinav. Fantastic set of numbers.
Thanks.
Really happy to see that you guys are walking the talk and, in fact, under-promising and over-delivering. So hope to see this continue. I have a couple of questions around IFF Overseas, the merger. I mean, I understand that you guys have done it on a revenue multiple, right? Like, would that be correct?
Not exactly a revenue multiple. I think there were three methodologies taken. One is your income approach, the other is asset approach, and the third is market approach. Market approach obviously doesn't apply to IFF Overseas because the shares are not traded publicly. So between the income approach and asset approach is what the valuer has taken this thing. So it has come to, from that perspective, the income approach method.
Okay, and can we get some sense on, say, the net worth of IFF Overseas, the net worth of the merged entity after that, and also how much debt would you have on your books after that, like both long-term, short-term combined?
Okay. See, net worth of IFF Overseas, I don't think I'll be able to, or I'm allowed to reveal that in this call until unless I've published it onto the exchange. But I can say that, see, when we're merging this company, it is being merged along with the land, plant, machinery, everything, building, plant, machinery, everything. And there is a technical reason also for that, why it is being done like that. Initially, we had thought that I would probably merge it without the plant and building, the land and the plant, but for technical reasons, as the same property has been given as a collateral to our banks and all of that, and hence, and plus the new facility is still not ready, and it'll take us at least 2 to 3 years for this entire thing to move. We are initially starting off only with the hard luggage plant. Once I have sort of settled that plant, then the next phase probably would be that I move this entire plant to the new facility. So we are looking at least 2.5 to 3 years down the line. So we need to run the plant for the next 3 years as well, right? So with all of this, once we merging with all the plant and machinery at a market valuation, probably once we are out with all the figures and numbers, I'll be able to shed more light. But I can just say that from a market valuation perspective, it's a decent sort of asset that they already have.
Okay, got it. If we are looking, I mean, you've already pulled off like a 130 crore kind of turnover in the first half. So, just wanted to get some sense. I see that the margins are faltering a little bit.
Yeah.
Can I get some sense as to why that's happening and how we can improve this going forward?
No, if you'll see, our margins have, that was not faltered. In fact, from last year to this year, our GPs have increased by 1.2%. Right? So our GPs have increased. The net effect of the PAT that you see is also, it should be seen excluding the ESOPs. Now, I had mentioned it earlier as well that ESOP as a policy, we're very, very serious about it, and we're bringing more people. I would want to bring more of my people into ESOPs because we all are only as good as our team, right? So the rejoicing has to be towards the team as well. And but now if you see, so there are provisions for ESOPs which have been put, and these are not cash expenses, so it's not a cash outflow. And in fact, it helps in it qualifies as an expense, and it hence brings down the tax expenses as well. So if you look at the adjusted EBITDA and the adjusted PBT, you will see that the margins have become better.
Okay, got it. And sorry, Avinav, one last question.
Yeah.
Just wanted to get the sales mix, the channel-wise sales mix.
Yeah, so as I said, our channel mix is actually very good. Very, very happy about that. Our online is contributing almost about say 44%. That's the digital. And when I say digital, it again encompasses both B2B as well as B2C. Now, B2C is something which is the marketplace that we control on all the various platforms. Now, with that, if you will see, our marketplace sales have started contributing to almost 35% of our overall e-commerce sales, more than 35% actually. So the past month, it was almost at 38% to our overall e-commerce sales, which is a very, very healthy sign. Out of that, we are also pushing in retail products over there. So which is again getting a little technical, so I'll avoid that. And large formats also have shown a very, very good growth. So can I have that slide? Yeah. So you'll see even in our this thing, if you'll see our LFS is almost 12%, right? Online is about 44%. Our FOFO and our corporate institutions. Now, if you'll see corporate institutions last call also had mentioned that we've done a few strategic calls. Those corporate institutions also have been done in certain channels, right? So, for example, it was done, one corporate, this thing was done in large format. Now, I could have easily added that whole percentage or that entire sales onto large format itself, and we could have looked at it like that. But I don't do that primarily because the nature of sales is different, and hence we put all of that in institutional sales. So, but the point that I'm trying to make is that these institutional sales also have come through these channels. So, very, very happy to see that, 1.5 years back, we were almost 50-53% contribution was coming from e-commerce. And now if you see, we've grown in all channels, and the e-commerce now is at 44% and 56% is offline, brick and mortar stores, which is a very, very healthy sign for us.
No, got it. And sorry, can I just get the standalone debt number again?
Of IFF Overseas. Yeah.
No, IFF Overseas and Brand Concepts. I mean, if you can give both, and then
yeah. So IFF has about 11 odd crores of debt, and Brand Concepts has about 25-26 crores of debt. This 26 crores includes the working capital, your everything. No, even the LCs, no. Okay.
Okay.
So combined would be about 37 odd crores.
Okay. And what kind of interest are we paying on this? Like, would it be like 10%, 11% around?
No, I think brand concepts is about 9%. I
Okay.
think it will also be the same.
Okay. Thank you so much. Yeah.
All right.
Thanks, Devraj. We'll take the next question from Abhi Jain, since he's unable to raise his hand. Abhi, you can go ahead and ask your question.
Hi, good afternoon. Hope I'm audible.
Hi, good afternoon, Abhi. Yes.
First of all, Mr. Kumar, I just want to say that we love your candor and honesty, and whatever roadmap you lay in front of us, you more or less deliver. So we can just sit back and applaud your performance. And every quarter we come back, we don't have to do anything as shareholders. We just have to come back quarter on quarter and applaud your performance. And I hope we continue doing that in the distant future. And I hope you continue on your, honesty and candor. And this is the way you continue, because I think there's a long runway for brand concepts with you at the helm. So congratulations on that.
Yes.
I just have two basic questions. One is, sir, I wanted to understand on this, the tax rate has been a bit variable quarter on quarter over the last 3-4 quarters. So just wanted to understand what is the steady state tax rate that is expected for the company, and if you can just give a flavor around that.
Yeah, it confuses me also, to be very honest. Every time that I see this thing and I check with my auditors and my finance, that every time, how does it go haywire? So I think there is some methodology where the 25% is the corporate tax, which is applicable to everyone. But then there are certain cesses which get added on. So I think there's a 12% cess at a particular limit. Then if you cross a certain turnover, or if you cross a certain it gets further added and everything. So net what I've understood is that our tax, and then there is some calculation of deferred tax also which comes into play.
Right.
So all of this put together, what I've understood is that our tax is anywhere between 29% to sometimes it goes up to almost to 31%.
Okay. Fine. So steady state tax rate would be in that range going forward.
Yeah.
So second question I wanted to understand is that I don't know if you follow Mr. Warren Buffett or not, but he has a strong So he has a strong view in terms of the power of the brand, and he says that the power of the brand lies in the pricing of the brand. And as soon as your pricing deteriorates, if you are not able to control that, you lose your customer, you lose the brand. And off late also we have done some discounting, etc. But I just wanted to understand that going forward, what is your plan, your strategy around treating that premiumness of the brand? Do you think that in a market like India, discounting is a necessity to attract that kind of eyeballs, or do you think that we'll reach a steady state, where the pricing would be premium, and we can get that premium pricing or that full pricing in the quarters going ahead? Because I'm very interested, and I think that it's the brand that is working for the company and the premiumness of the brand, and that is something that will be the long way, the long runway of success for us. So any strategies, or what are your thoughts on that? If you can just help us understand that.
Yes. So I think it's a very, very relevant thing, Abhi, and this is something that this subject is very, very close to my heart. Where most of the players, even today in this industry, they operate as a commodity industry rather than operating as a branded industry.
Right.
Yeah. And I've always believed that brand is something which so products are made in the factory, brands are always made in the mind of the consumer.
Right.
And to make that brand, you need to have a good story around that brand. If you have a strong story, and if your consumers resonate to that story, to those brand values that you're putting in, it's a you have to think of it as it's a person, right? You're putting in life into a person. And how you shape that person is how well he gets accepted in the society. Right. So if he is extremely, if you've made that person into a very exclusive, very high-end, sort of a glib talker, but at the same time he's super, super rich. He will obviously move only in the super rich circle, right? Now, if you think that person, could he also connect to a farmer? He will not be able to, right? So that's what, in a nutshell, it means that if you start discounting, but sadly, what has happened is, this industry, the major market players, the only way, they thought of growing was discounting. And now, believe you me, discounting ideally, we call it EOSS, end of season sale, which essentially means the purpose of EOSS was that whatever is left of your seasonal stock, you discount that and sell. Here, it's not discounting, it is a fictitious MRP. Right, to be honest, I hope none of my competitors see this video, but it's a fictitious MRP. So it's, in a way, you're cheating your consumer. Where you're saying that you decide on the consumer price and then you just do plus into 2. That becomes your MRP, and you say that it's at a 50% discount. So we are, while yes, we are in this industry, I can't ride the high horse that I will not sort of discount at all. But we keep a track on it, and I think I can safely say that we are I could claim this, that I am the least discounted brand in this category. Sometimes, even in the e-commerce, I wouldn't again take names, but my last meeting with some e-commerce players, and I had told them very, very categorically that, there was some price war happening, and they in fact were selling at lower than they had bought from me. Burning from their own pocket. Forget making any margin, burning from their own pocket. And we went, sat down with all the major players, told them very, very clearly that if anything of this sort happens again, we're going to pull out of your platform. Very, very clear. I don't want to compromise on the brand and the brand's value. So we put guardrails, and from a positioning perspective, I believe that Tommy Hilfiger as a brand would go a little more premium. Once we have the entire Benetton set of products available and out in the market, Benetton would be obviously priced lower than Tommy, and Tommy would be going a little further up, as is the case even for the overall brands. If you look at their stores, they've been performing really well. I think, and Sailesh has always been involved with Tommy now. Obviously, overall, Arvind is a very dear friend, and I really have a lot of belief in his acumen, in his business acumen. So Tommy is going to go from strength to strength there, and the brand has become more premium even in their stores. So we're also looking at how can we make this a little more premium. There are a lot of things that we've done. We launched a leather collection some 2 or 3 seasons back, just as a test. Now, where on an average we were selling a backpack for say 3,000 rupees consumer price, or 2,500 rupees a consumer price, we launched leather backpacks for 18,000 MRP. We sell it from our stores, 0 discount, and looking at the brilliant sell-through of those bags, we now have a full dedicated wall in our stores. If you go to a bagline store, you will see that there'll be a full dedicated wall on this entire leather business collection. And they're very fairly priced. They're not abnormally priced, fair pricing, no fictitious pricing over there. And we're giving an extremely good quality bag, which the consumers are loving, right? So there are a lot of these things that we've done, even in our distribution. our overall pricing, our wholesale price in the distribution has gone up by almost 30%, close to 40% actually. Close to 40% in the last 2 to 3 seasons. So we are constantly upgrading the products and constantly elevating the brand.
No, appreciate your honesty again. And as I said, we'll just keep coming back quarter on quarter to applaud your performance. And I hope you continue in the same way. And thank you so much for your time.
Thanks, Avi.
Thanks, Avi. We'll take the next question from Jignesh Kamani. Jignesh, you can go ahead, please.
Yeah. Hi, Abhinav. Congratulations for another set of great number.
Hi. Thanks, Jignesh.
Up to just on the UCB, where are we right now in terms of a design collection? I can say moderation and revamp. And tentatively, what kind of revenue you think we can book this year and future roadmap for that?
UCB, we've already started the rollout. So the rollout has already started. We are in fact, I think we would be in close to 150 point of sales already with UCB. However, we've not been able to roll out all the product categories. So small leather goods have already been rolled out. We are there now in Shopper Stop and Lifestyle. The initial figures which are coming are quite nice, very encouraging. Travel gear majorly would get launched during I think the rollout will start happening in Q4 because luggage as it is, as all of us understand, takes a little more time. So by December onwards, we'll start the rollout of luggage, is what I believe. And I would say that this year, it's difficult to comment on the exact figure that we will sort of achieve, but I think UCB will still remain in single digits in terms of percentage of contribution. It'll be under 10%. But this is a rollout year. From next year onwards, I would see that UCB will start contributing much more. The initial feedback, this thing is very positive and very good for the brand.
Understood. Second thing, if you take for the majority of the brand view, we've seen that this time.
Jignesh, your voice is very, it's muted.
Sure. I'm audible.
Clear आवाज नहीं आ रही है.
Audible now or no?
Yeah, okay.
So for the many of the brand, this time Diwali has been postponed from second quarter to third quarter, and hence their revenue and growth was slightly tepid. We also witnessed that because number doesn't look like that.
Sorry, I didn't.
So we have also witnessed that Diwali demand has been shifted from second quarter to third quarter for us because Diwali this time has been delayed.
Yes, that also, and plus, October, if you will see, has not been a good month for the entire retail industry, mostly, so 2-3 reasons. I think one, obviously, 4th October से ही आपके वो श्राद्ध पक्ष वगैरह भी शुरू हो गए थे. A good 15-20 days were in that श्राद्ध पक्ष. Diwali आपकी delayed थी. It was 12th of November, so the Diwali shopping sort of started happening more close to the Diwali period, a week 10 days back, a week 10 days before Diwali. So markets have started थोड़ा 20-21 October के बाद से retail has started sort of picking up, but October that has not been a very, very good month for overall the retail industry.
Understood.
And again, adding my analogy, the World Cup, while we all are hooting for our country, but that also I don't think has helped retail very well because all India matches were on weekends. And the way India is playing, there was very less footfall. We saw a direct drop in footfall across all the stores.
Understood. And how is the growth rate between the small leather goods item and the travel gear for this quarter?
So obviously our travel gear has taken the front seat now, and the travel gear has started growing also pretty well. So if I were able to comment on my Q2 cover, my travel gear has grown by almost 136%. So we more than doubled in terms of the travel gear. In small leather goods, we are in single digits. And I believe that, we, again, I have always been very, very open and this thing with all my people and all the shareholders. I believe that even in small leather goods, if I break it down, there are two major divisions. One is wallets, the other is belts. We continue to see a good demand for belts, but wallets as a category, I feel that it's not a very high growth category anymore. I wouldn't say that it's a dying category. I wouldn't say that, but I would say that, yeah, we're gonna see a very, very tepid sort of growth, or rather a degrowth in that category, primarily because a lot of India is shifting to digital. So hence the usage of wallets, the whole relevance of carrying a wallet is going down, and more so if you will understand in the young consumers, in the youth, it's further going down. People have moved to digital payments. It's become so easy. So as a company, we will also need to innovate. We will need to sit up, think on our feet, because it's a sizable amount of business that we were able to generate from our wallet sales. So we are already in the process of putting down certain other categories to sort of compensate this division of our business. So yeah, you always have to evolve, because consumer preferences might be changing. It will change. So hence it's a constant evolution process. Consumers are evolving, hence you also need to evolve. So we are also in that process where we're looking at how can we evolve, getting into different categories of small leather goods.
Okay.
I hope I've been able to answer your question.
Yeah, a lot. Thanks a lot.
Thank you. We'll take the next question from Neerav Saxeria. He had some technical issue when invited earlier. Neerav, you can answer, please.
Yeah. Hi, am I audible now?
Yes, Neerav. Yeah.
Yeah. So in the previous call, you had mentioned that you would like to reduce the reliance on Tommy Hilfiger as a brand in terms of revenue. So has it reduced, and could you also give the percent as for Q2?
Yeah. So as I said, see, Tommy Hilfiger is a beautiful brand and very, very close to my heart. I started my retail journey from this brand. But at the same time, I think when I say that I want to reduce the dependence on Tommy, it basically means I want to reduce the dependence on any one brand. Yeah, it could be Tommy, it could be Benetton, it could be XYZ, any one brand. One brand was required for us to perfect the model, to come to a certain stage, to come to a certain scale. And then from there, we want to become a house of brands rather than, concentrated on just one brand. So yes, the share of Tommy Hilfiger as a percentage has been coming down. Let me just look up on the exact Q2 percentage, but I would, till last year, we were almost about 85% kind of revenues coming from here. This year, I think we should exit somewhere close to 70, between 75 to 80%.
Okay. And so is the company thinking to introduce any new, not introduce, but enter into any new product? Because previously you had spoken about caps.
Yes, it's a work in progress.
Any other products on a similar line that you would like to enter into?
We are, as I said, last question to the answer में जो मैंने बोला था कि we were into fashion accessories. So we will keep hunting for new product categories. So I've entrusted, we've in fact formed a proper R&D team. So instructed my team to come out with certain new products, certain new categories where we could, where we see that, if we start building it up today, probably 3 years down the line, we'll start seeing the the results of those categories. So yes, we are in the process, but it's not that, as I've said earlier also, we will not bet our shirt on any new experiment. So while the experimentation is always ongoing, we don't want to bet our shirt on it.
So is there any timeline for CAP, since the CAP culture is entering into the Indian market slowly and steadily now?
Yes. Yeah. So I think I would say that the good season also is spring summer. So hopefully by spring summer we'll have some small collection which we would be sort of going ahead and launching.
Okay, sure. Thank you.
Thanks, Nirav. We'll take the next question from Ajay Agarwal. Ajay, you can unmute, please.
Thanks. Hi, Abhinav. Congratulations on good set of numbers and happy Diwali to you and your family.
Thank you. Wishing a happy Diwali to all the people and their loved ones present over here.
Yes. You already presented us with Diwali gift, I think, with good numbers. Thank you. First, I have two questions. First is, is there any update on Tommy contract? Any revision expected, in terms of any terms and conditions, pricing?
Yeah, थोड़े बहुत negotiations होते हैं. So, but those negotiations and everything is done. It's just that I'm awaiting the printed contract. So.
Okay, so.
Yeah.
Any significant?
Sorry?
Any financial impact, major financial impact? Any change in royalty income?
See, I'm not allowed to, in the past I've been, being in my candor and everything, I've shared it earlier as well, but then I was rightly prompted that, I'm, because of the NDA that I signed, I'm not allowed to actually share the exact commercial details. But see, royalty for, you have to understand royalty for me is essentially, it's a component where it's basically a brand cost. It's a product cost, so if you're able to charge a certain premium to a brand, that's how you calculate your royalties and pay. So it's not that we end up paying through our own pocket. So it's a variable cost for us, right? So, yeah, so I don't see whatever these changes in royalty percentages, up, down, this and that. I don't think it will have a major bearing on my net margins.
All right. Okay. Fair enough. Thank you. Second is any corporate sales or any are we looking at developing any team for this corporate department, like corporate B2B sales for Diwali?
Yeah, we already have. We have a small team. There's one person at the central, but we are looking at. So this is a division that I would say that yes, in the future we would expand on this division, and I see a lot of opportunity coming along this way as well. But yeah, so currently it's split between the various teams. So because we get corporate inquiries through our EBOs also, we get corporate inquiries through our large formats also, we get corporate inquiries through various different channels. So it's split up between all the channels, and hence it's a shared responsibility of all the channel heads. But yes, going forward, probably next year we might put a full this thing in motion, where we would then actively look out for corporate promotional tie-ups.
Okay. All right. Okay. Just a small clarification. During Diwali shopping, I've seen a store at Southex for Tommy, but while going to the website and presentation, so there is only one store in CP.
Yeah. So we don't call that as our EBO. It's a shop in shop. Earlier we used to have an EBO over there, but then it was a franchisee store, and we agreed with the franchisee that he wanted to develop his own multi-brand this thing. So he keeps other brands as well. Now, because he keeps other brands as well, we don't qualify it as our EBO.
So how much of these EBOs are there in like Delhi or like some other parts? Because it will definitely we won't open any store around it. Might be something.
No, see, Southex as a market is a good market, and but it's more of a high street market. We are currently we were focusing a little more on either the premium high street, very premium high street, or the premium malls. But that doesn't deter from the fact that we can't open a store. See, a store has a 2 kilometer at best, a 2 kilometer core radius. Any offline store, until unless it is destination shopping, it will always have a 2 kilometer core radius. Extended radius could be maximum 5 kilometers. So from that perspective, if you look at the more the stores, the merrier. It's that kind of a situation. The more you are seen, the more you sell.
Okay. Thank you.
Yeah.
Thanks, Vijay. We'll take the next question from Kashish Gandotra. Kashish, you can unmute, please.
Congratulations on a good set of number. My first question is pertaining to if you can give me the revenue split brand wise, that how much has the revenue come from Tommy, how much is it coming from UCB, that would be helpful.
Okay. I'll give you H1 or you want a Q2?
Q2 would work. Or even if you have H1 ready with you, that is also good.
Just a second. I just have to look up to give you the exact percentages. Now you could proceed on to the second question. We could come back to this.
Yeah, sure. Then my second question is pertaining to the UCB brand. So which is going to be the key product into the UCB? So for example, in Tommy, it is the luggage. But in UCB, where do we see the majority of the revenue coming from? Whether it will be wallet, belt, or the travel bags which we are having, which will be the key product in this segment, in this brand?
Yeah, I believe all the 3 product categories, small leather goods, travel gear, and women handbags, all the 3 product categories have a lot of potential in UCB, because UCB as a brand, if you see, it's not only a fashion brand, it's people love the brand. It cuts across various segments also. So even the, UCB Kids, for example, is one of the biggest kids brand in India. It's one of the most successful kids brands in India. So right from kids to youth to young adults to adults, everybody, it's a very inclusive brand. And hence, I see that, even in the women handbags, I see women liking Benetton a lot. So I foresee that we'll have a lot of traction there as well. But yes, if you ask me about the major category, I think travel gear in Benetton in overall is gonna be the hero.
Okay, just one more thing to add. Do we see that UCB has a bigger market as compared to Tommy? Because Tommy is more of a premium brand, while I guess UCB is something which can be associated with middle class. So do we think that the market potential is going to be bigger in UCB?
In a way, yes, I would tend to agree with you, Kashish. In fact, if you look at overall brand figures, I think I'm not completely aware, but from the number of touch points, from the number of stores and everything, UCB is far more bigger in terms of number of stores than Tommy, because see, Tommy is an exclusive brand. Tommy is a premium brand, whereas UCB, in fact, in India, Tommy sits more in the bridge to luxury or say a super premium kind of a category, whereas UCB is more sits in the mass premium sort of a category. So obviously, UCB as penetration, as overall sales also, I think UCB would be bigger than Tommy Hilfiger standalone.
Okay, great. Thank you so much.
That's on the apparel side. That's on the brand side. How much of that we are able to replicate? I would hope to replicate that. But how much we are able to replicate, we'll have to wait and see.
Sure. Thank you so much. I think if you can just give me the revenue split, that's it for myself.
Yeah. So, see, exact figures I'll not be able to share, but I have the percentages in front of me. So UCB is close to about 3 to 4%. Aeropostale is about 3%. My other brands and all the other activities that we do is about almost close to 13-14%. And hence, TH is just tad less than 80%.
Okay. Well, thank you so much. Good luck for the next quarter. Thank you.
Thanks, Kashyap.
Thank you. We'll take the next question from Vinay Batija. Vinay, you can unmute, please.
Hey, hi, Abhinav. First of all, congratulations on a very good set of numbers. Been tracking this company since a long time. I have few basic questions. So first of all, as far as, so like the earlier guy asked for a breakdown based on brands, can you give breakdown on the product categories too? Revenues depending on product categories. This would be like hard luggage, women handbags, and henceforth. That would be one thing.
Yeah.
Going forward, even if you don't have it now, that's fine. Going forward, reason I'm asking is where. So I understand that. Okay, fine. We will. I mean, taking if history is a good predictor of the future, brand concept would do really very well in the hard luggage segment, the bigger luggage factor segment. But where would be the next, exponential growth coming from? I guess, are we looking at handbags, or what is the product category that we would be targeting at? Personally, I feel that India is the Indian market is at a stage where handbags could take the next leap. So that is your thoughts on that and the breakdown. My second question would be, so this is not again so I have few females whom I showed the brand. Sugar Rush was shown, and even UCB was shown. UCB, I do understand that it's at a nascent stage, but compared to other brands that we have, specifically in the Indian handbag segment, so be it Caprici, be it Baguette, or these, whether we are in the similar price range, I guess. So the variety that was available was not at par with the brands that are there in the market today. So what are we doing at that? So you understand that I'm trying to figure out that what would be the next product that would take brand concept from a 500 crore company to a 1,000 crore company. Yeah. So.
Right. Okay. So to answer in terms of percentages, our overall travel gear, if you will see, is close to, will be about what? Yeah, so travel gear now is more than 60%. So 61% is travel gear. Handbags would still be very, very small. Handbag would be sub 10% still. And balance is all smaller the goods. So that's the broad split up. Now, if you see that, yes, handbag, as I said, is sub 10%. Smaller the goods, I think, is gonna be, it's gonna grow obviously as we're gonna add more brands and everything is gonna grow. But as I said, that wallet as a business is not a very bright looking category, right? Because of the consumer preferences changing. So unless we are able to sort of innovate new products and everything and then grab onto that, is going to be a little muted as a story. So that brings me to, but yes, belts, I think that, that category is here to stay, here to grow. And I don't foresee any threat to belt even 10 years down the line. Right? Nothing will replace a belt. You will keep wearing denims, you will keep wearing belts. So that's a very intrinsic category. Nothing will happen to that category. So, that's smaller the goods. Now, which brings me to the two mainstays, which is one is women handbag, the other is travel gear. So I'll quickly, this thing on the travel gear, we all are seeing travel is increasing. There's still a lot of long way to go. So hence there's no doubt on the travel category, to be doing good. Coming on to the handbags, handbags is again a very different animal. So I personally foresee that it's a brilliant category. Today or tomorrow, this category is going to explode. Today, what is happening is again, lot of players have again commoditized even handbags as a category. So there are two markets existing today in handbags. Either it is directly at the bottom of the price curve, where right from say 1,100 rupees, 1,500 rupees, going up to say maximum 2,500 rupees, 3,000 rupees. Either everybody is concentrated on this segment, whether the brand that you named, whether it is Gadget, whether it is Lavi, whether it is Caprese, whether it is Allen Solly, everybody is concentrated on this. Now, as you move up from say 3,000 rupees to say 6,000 rupees, you start getting a few more brands added to it. The whole space from 5,000-6,000 to 10,000. Now, in that space, there are just 2 or 3 brands which come to your mind. Then all the other brands, which are the international brands, they start 15,000 and above. So then you have a lot of options. You have right from Michael Kors to Coach to Prada to, Prada actually gets into luxury, but you get a lot of brands in that bridge to luxury segment. So from a consumer perspective, what I feel is that there's hardly anything available between 3,000 to 10,000. So that's a space which I believe that it's a good space to be in. I wouldn't want to be too much into that 1,200, 1,500. So Sugar Rush for us was majorly in that space, but as I said, it's a bloodbath over there, and I don't like to sort of just burn or something and then try to make something. So so hence, from that perspective, Sugar Rush, I don't see Sugar Rush doing some great shucks untilness. No untilness. I don't see it doing any great shucks. So till the time we get the right brand from in that price bracket, in that price portfolio, UCB of course is a big bet for us. But UCB also would be sub 3,000 because that's the price bracket, price matrix that fits into UCB. So we hope that we'll be able to do some based on the design, based on collections, based on whatever our expertise is. If we are able to do something good in UCB, it will be very, very heartening to see. And then I would like to take brands which are in that price bracket, which are in the premium to bridge to luxury space, because that's a space that I've been eyeing for a long time. But we need the right brand for that space. I hope I've been able to.
Yeah, fine. Thank you.
Thanks. Thank you, Vinay. We'll move on to Kamlesh Bagmar. Kamlesh, you can unmute and ask your question, please.
Yeah, hi, Abhinav. Thanks for the opportunity.
Hi.
So one question on the part of your renewable or agreement with Tommy. Like say, I believe it's due in December.
Yeah.
And if I see your license fees as a percentage of total revenue, it's around 10% based on your last financial year. So as you mentioned that it won't impact much, but if say this transition period, right from December, how it transitioned, and if the proportion of the license fees is increased, then how do you see the impact on our earnings? And first on the clarity, would it be say renewed in a very free manner, or does it take some time, or how that process happens?
So PVH in India is a JV between PVH Europe and Arvind. Yeah, so PVH Europe is the parent company which holds the rights for Tommy Hilfiger as a brand. Now PVH Europe gives the license to PVH India, which is this JV company in between PVH and Arvind. And then in turn, this PVH India gives us the license, us or be it Titan or be it Sterling or whatever. So our reporting licensor is PVH India. Now, so we will follow a cycle. So of PVH Europe की जो cycle है in terms of number of years or in terms of मतलब जो भी उनका contract है, we will be following the same cycle. So that's number one. Now number two is you asked about the royalty and the change. See, for a quarter here and there might be some impact. Whenever you take a new brand, you launch a new brand, you launch or you renew a contract and there is a change in margin structure or royalty structure. This I'm not talking only in respect of Tommy, but I'm talking in a general aspect that you might see an impact in probably a quarter, 2 quarters or whatever. But when I say that I don't see a major impact of this thing, because overall, from the long run perspective, you have to understand that this is this gets loaded onto the product, right? So it's how much of a premium can a brand command, and from that perspective, how much of royalty percentage would be there. So it stays in that realm, and hence at the end of the day, the impact here and there. अब मैं बोलूँ आज कि 1% 2% का impact आएगा, but आपकी economy of scale आएगी, तो उससे आपका ये 1% 2% meet out हो जाएगा, फिर आप 2% की pricing बढ़ा दोगे. So net we aim that even with this continued growth, I would want to sustain my margins.
Secondly, on your like say outlet distribution. So like if I see MP, it's around 7 stores, while in a big market like Maharashtra, it's a similar number, and in Delhi it's just a 1 store. So given the huge like say outreach of these brands which you have, like say, don't you think that we need to work upon that? Because I don't think 7 stores in MP really justifies given the brand we have.
Right. No, our MP stores are also doing very well here. But yes, you're right. Delhi, we had actually 2 to 3 stores. 1 store we closed during COVID, which is Metropolitan Gurgaon. And then we had 1 Mall of India store, which it was a franchisee store, and it was sad that during COVID we lost the franchisee itself, so he's no more. And then there's some shuffling which happened, and after those stores itself, we took a call that all the premium malls will be directly signing rather than signing a franchising store. So yes, we are actively looking for more stores in Delhi and that entire Delhi NCR region. In fact, I see that we have 1 store in Noida, which is again Delhi NCR region. But I believe that yes, that it can easily take at least, we could have a 10 store presence in the Delhi NCR region easily. So to me, yes, it's a good opportunity which lies ahead. But as I said, getting a store in a new mall is pretty easy. But an existing running mall, if you want to enter that mall, you can enter only once a churn is happening. So we'll have to sort of vet, and then take more stores.
I can squeeze in, like, on this, your, online is around 44%. So
Right.
how do you this panning out? Because I believe that, like, people would be more happier if this, like, say, the offline moves up to, like, say, 40-45%, because there you will have the huge brand presence. For me, like, I stay in Mumbai, western side. I don't see any of your store there in the entire western line, which is a huge market. So, like, how that will pan out? Because this must change. Like, say, 44% online. Like, say, if I go on the Amazon and search for, like, say, Sugar Rush, like, say, 100 of brands would be available there.
Right. See, Sugar Rush is not a brand that we want to build, Kamlesh. So I wouldn't be opening any Sugar Rush stores, right? But at the same time, as I said, yes, Bombay, we are now 4 stores, if I'm not mistaken. So, and we are actively looking for opening more stores. But you have to understand that we are a growing company. We are a developing nation. We're not already a developed nation where you will see 100 stores of bagline all across, तो आपको और ज़्यादा दिखता. But we have 35 stores all across the country, 36 stores all across the country. So, I see the mug half full, rather than half empty. I see that we have so much more potential to grow. So we are opening more stores, and but yes, as मैंने पहले भी मेरे इसमें बोला था कि I don't like to take bad calls on stores just on the pressure that we need to open a store. That's not me. Secondly, answering your this thing about e-commerce, I think e-commerce is here to stay, and as a brand, as a retailer, as a retail company, whoever thinks that e-commerce is तेरी main तो यार ये stores हैं और main तो वो है, I think that's a wrong way of thinking. You have to move as per your consumer, right? So e-commerce today, right from nail to ship strategy kind of thing is working over there. मतलब हर चीज ही के लिए ही आप आजकल e-commerce जाते हो. So it's become a part of consumer's life. So hence I have no qualms, or I don't say that 44% of revenue is coming from digital. I'm happy, and my offline is also growing. I'm still happy, but that doesn't mean that I don't look down upon that channel. It's a beautiful channel. At the end of the day, you're serving a consumer.
Thanks, Kamlesh. We'll take the next question from Agam Shah. Agam, you can go ahead, please.
Am I audible?
Yes, Agam.
Yes. Congrats on a good set of numbers. A quick question. I know I joined in late, so I might have missed your opening remarks. So I don't know whether you commented on. Can you comment on any new more branch in pipeline or anything we are doing on that search? Whatever roadmap.
I did comment on this. It's an ongoing process, Agam. So as and when we near a completion or near this thing, I will for sure. You guys will be the first ones to hear.
Are we there anywhere near or not yet?
No, I wouldn't say that we are anywhere very near. In fact, I answered saying that I don't foresee something happening in this fiscal. Hello.
There was some.
Thank you. That's it from my side, and all the best.
Thanks, Agam. We'll move on to Shrikant Bandaru. Shrikant, you can unmute and ask, please.
Yeah, hi Abhinav. Congratulations on great performance once again.
Thanks, Shrikant.
Proud to be a shareholder of Brand Concepts. I've been to the Tommy Hilfiger luggage showroom in Mumbai, and I was extremely impressed with the design of the suitcases. So
Thank you. Thank you.
I'm a consumer of Samsonite and Tumi, and I know these are all different price points, but I'm tempted to move to Tommy Hilfiger. I mean, the suitcases from a looks perspective are fantastic.
Wow. So that's sort of the best compliment that I've got today. If I'm able to, that's music to my ears. If I'm able to convert a Samsonite consumer and a Tumi consumer to a Tommy, I think that gives me a lot of high.
I think the younger people, irrespective of their purchasing power, might be tempted because the design is like really different and really very nice. The second thing is even your bag line. I saw a massive billboard on Western Express Highway in Bandra.
Yeah.
Arjun Rampal, the new campaign, and it looks very nice. So congrats on that too. My question is, when you decide on expanding your stores, how do you decide between bag line versus, let's say, a Tommy Hilfiger travel gear store? Because you have pros and cons with both. Bag line have economies of scale, multiple brands, multiple products. Whereas you still have to create that brand equity. And Tommy Hilfiger obviously is such a strong brand, so people would just walk in. So how do you decide on this when you expand from 36 to 100 in the next few years?
Very good question, Shrikant. In fact, this is something that we also have a constant sort of battle between ourselves, where on one hand, we would want to open bag line more and more because that's our format. It also gives us the opportunity to showcase more brands into it. But at the same time, we see that wherever we have a Tommy Hilfiger travel gear stores, the numbers are just astounding. And, also the position of the store, obviously when it is a brand like Tommy Hilfiger, the positioning of the store that we get is better. We are able to get, say, a ground floor location or a first floor location, whereas we're able to beat the curve of saying that, we'll be with the other luggage players. But when it comes to bagline, of course, everybody understands it's a multi-brand store. So yes, there is a constant fight. There is a constant battle. And I wouldn't say that there is one single recipe through which we decide. Our first priority is for bagline because it helps us showcase all the brands, right? But at the same time, we have also now decided that whether it is today or whether it is, say, 2-3 years down the line till a foreseeable future, we would not shy away from opening mono brand stores also. So if the brand is strong enough and if we have a good proposition, we would probably open mono brand stores also. So earlier we had taken a call that we will now not open any mono brand store. We will open only bagline stores, but we've corrected on that decision. And we've thought that if we are getting good brands or if the brand can handle a store, we will give it the platform. So we'll open a store for that brand.
Makes sense. Thanks. And my last question is, do you have an internal benchmark on the same store sales growth for mature stores? And what would that be?
So every month, whatever our reviews and everything, we track our like to like and then we track our BD, business development, whatever the development would have happened. So even if I talk about a like to like sales growth from last quarter to this quarter, the like to like sales growth would be anywhere in the region of I think if I'm not mistaken, it was somewhere close to about 17 to 18% when it comes to the offline, and e-commerce, of course, the growth rate was a little higher.
Okay. Thank you so much and all the best.
Thanks,
Shrikant. Before we move to the next participant, there's a question I have on chat from Antara Bhattacharya.
Okay.
Sir, congratulations for an excellent performance of the company. Do you have any plans to introduce the products in defense canteen stores department? you may like to consider it as a low-cost alternative where revenue growth can come in at limited promotion costs. So his first question is, would you look at canteen stores department?
Yeah, so canteen stores department, we had, initiated our files, but as I've said, it has always been, there are too many agencies and many agencies involved in everything. So it's a time-taking process. So we are definitely interested in that business. But as I said, it is right now work under progress. The second question was?
The second question is, I came across a report that Delci is planning to shift its manufacturing to India.
Yeah.
Are we in talks with them for the same? Any other premium brand that we are planning to bring into India?
Are we in talks with them for what? For manufacturing?
I presume so.
So I think they are also looking at setting up their own plant as well. And in that, obviously, we will have no this thing. And for us to be in talk with anyone, for your, what do you call it? I'm getting actually a lot of separate chat questions also.
I'm handling that, Abhinav. No worries.
Oh, okay.
Yeah.
No, there are certain direct messages.
You can ignore that for now.
Yeah, okay. Yeah, so it's too early to approach any brand and say that we want to do your manufacturing because we've not even set up the plant. But yes, once the plant is set, we will not shy away from, probably making it for a few other brands as well. So we will approach it then. I hope I've been able to answer that.
We'll take the next question from Man Asher. Man, you can unmute, please.
Hello, am I audible?
Yes, yes.
Congratulations, sir, for a great set of number and always a pleasure to hear from you every quarter. So can I go ahead with my questions?
Yes, yes, please.
Yeah. So what I wanted to know is that the store expansion that you said 100 stores, right, in next 2 to 3 years. So do we have any particular IRR in our mind?
See, whenever we make a store, we have a very stringent process of making a store, of approving a store. We call it the store approval process, where we not only look at the location, we look at the adjacencies. It's a standard retail procedure. Most of the companies, all good retail companies follow that process. Apart from that, we also make a 5-year business projection and we calculate an ROI from a franchisee perspective. And we say that the franchisee needs to make at least 15% ROI from that store. So if everything, all of this passes, only then we sort of approve a store. So yes, so from the store perspective, if you look at anywhere between 15 to 18% of ROI is what we look at before we approve a store.
Okay. And if I'm correct, most of our stores are company owned and company operated, right? We say COCO model.
No, we have almost a 50-50 split.
Okay, so the split will continue, right? If you are saying 100 stores, then?
Yeah, if I'm saying 100 stores, I would probably till 100 stores, it might be a 50-50. But, or probably it could be about 40-60. So company owned and company operated would only be in all the premium malls, the premium locations. All those would be company owned and company operated. As I said that we are now looking at expanding more into high street also, into tier 2, tier 3 cities also. So all those expansions and those modes would be done primarily through franchising model as a model.
Okay. Sir, if in quarter of one Concall, there was some mention about PMS, I don't know, it is product maintenance or some manufacturing of IFF. I couldn't find the what the particular system is or what the particular value chain is. Could you just share some light on it?
Yeah. So PMS, when I had mentioned, it was more of product management service. So it is more of, जैसे हम रेगुलर बोलते हैं ना कि हम किसी और ब्रांड के लिए मैन्युफैक्चरिंग करते हैं, मैं उसको थोड़ा सा डिफरेंट नाम देता हूँ. With all the experience and everything that we have, we don't only manufacture, or what this division intends to do is not only manufacture, but become a one point of solution. So if you want to, for example, do, मैं सारे brands का license तो नहीं ले सकता, right? And we get a lot of inquiries. So the idea was that now if there is a brand which has, say, 50, 60, 70 of their own stores, 100 of their own stores, they want us to take the license, but doesn't fit in our criteria. And we want to help them in launching this entire portfolio of products. So we design, develop, manufacture, and give it to them. Now they could further do their own distribution. They could further put it in their own stores. So this division is intended to ideally do that. In a way, आप बोल सकते हो कि यह दूसरे ब्रांड का business, more from a manufacturing perspective.
Okay, so the capacity that we have, what I get is we also do the manufacturing of them and we also try to establish them in the marketplace, right? Is that thinking right?
No, we don't take the front end. So if you take this kind of a brand, we will not be taking the front end. We'll be just taking the design, development and manufacturing and giving it to them. So
type of a contract manufacturing?
Like a contract manufacturing.
Okay, got it. Sir, that's all from my side, but could you share some this Tommy renewal license renewal updates?
As I had said that I'm just awaiting the final printed copy. The moment we sign it, I'll be putting it out.
So it is, yeah, is it 5 years till perpetuity, something like that? The first time we have signed it is.
No brand will give you perpetuity here. We will fall under, मैंने ये पहले भी explain करा था, that we will fall under their cycle of the international body giving it to the Indian body. So we'll be falling under that cycle. So as of now, this contract is going to be till 2026, and because we've come in the midterm. From 2026 onwards, they'll follow the same cycle as the international cycle.
Okay, so the renewal license we get.
We'll have to restrict the questions. We are running out of time. I need to move on.
Sure. Thank you. Yeah, sure.
Sanchit, you can go ahead and ask a question, please.
Hello, am I audible?
Yes, Sanjit.
Yeah, so I would like to ask 2 questions, but before that, congratulations for the excellent results. The first question being, that I saw on the income statement for Q2 that there has been a fall in the top line margin from 6.9% to 6.2%. So could you justify that?
I have actually answered this question earlier as well. Essentially, you need to look at the margins perspective. You need to look at it, pre-ESOP. So adjusted EBITDA, and hence even in the investor presentation this time, we've updated it as adjusted EBITDA and adjusted PBT margins. So you'll get your answer over there, Sanjay, that our margins are intact to tell you in one line. In fact, it has grown.
Okay. And the second question being is that we have done a lot of geographical expansion, like we have stores in Guwahati, Gujarat, Bangalore, Chandigarh. But do you not think that that would eventually increase our logistics cost? And if you like focus on geographical concentration, that would like reduce the logistics cost for inventory.
सर ऐसे तो फिर मैं इंडिया में एक्सपैंड ही नहीं कर पाऊंगा अगर मैं लॉजिस्टिक कॉस्ट पे से सोचूंगा तो yes, to service one store obviously it becomes a little difficult, but when you are present across multiple channels, so south for example we are very strong in all shopper stop lifestyle, we go up to Chennai, Madurai, everywhere, right? So logistic cost obviously kahin kam hogi, kahin zyada hogi, but you know, at the end of the day, India, the whole country is your playing field. So you need to figure out solutions to reach out everywhere.
Okay, thank you.
Thanks, Sanjay. We'll take the last question from Richa Agarwal. Richa, you can unmute and ask your question, please.
Thank you for the opportunity. Abhinav, my question is, I think last year you had shared a vision of, 500 crore kind of revenue in 3 years, around 30% growth. I just wanted to understand this target or this vision is based on the current brands that you have, or it also includes, the plans that you plan to acquire, let's say by next year.
Everything put together, obviously, Richa. It is with the existing brands as well as the new brands. The current brands that we are rolling out, all put together. So overall company, we've seen a vision of reaching 500 crores. And I think I still stand by that vision.
Okay. And what kind of investment, if you could give us a sense of capex or investments that would go into your own manufacturing facility as well as setting up the number of stores that you are looking to set up?
The manufacturing setup, first phase would be anywhere between 25 to 30 crores, close to about 30 crores, which will include the working capital as well. Yes, it will include the working capital as well. So that will be the first phase of investment. And as far as the store goes, every store, our fixtures cost, even if it is a 500, 700 square feet store, our fixturing cost is somewhere close to 3,500 rupees per square foot. So 15-20 lakh rupees, around 20 lakhs is something which we spend mostly on fixtures and furniture. Another 15 lakhs you could take as stock, and depending on the mall, whatever deposit, 4 month, 6 month deposit that we calculate, you calculate that. So typically to open a store, it costs about 40 odd lakhs, between 40 to 50 lakhs. Is the store opening cost. Now, it depends on how many stores we are able to open or opening in COCO. That will decide the nature of that, the quantum of that capex.
Okay, so let's say, at a base of 500 kind of revenue, do you see the mix changing a lot, or is it going to be more or less in the same range? Also, what kind of impact on margins could dominance of a particular channel, let's say it is online as of now, would have on the overall margin profile?
Margins ka aisa hai na, Richa, that most of the channels, they are, the whole variance is -5 to +5. That's the kind of variance maximum which would happen. So margin structures काफी similar रहते हैं. Yes, certain channels have much better margin structures, and certain channels, but the variance, as I said, is only that much. Now that is something that it'll be very hard for me to comment that exact mix 500 ka kya hoga, but I personally feel that online will remain in the region of around 40-45%, 40% at least. And rest 60% would be probably offline. 55 to 60% will remain to be offline. That is the kind of mix that we are seeing. And the idea here is that we don't want to say that we are only an EBO company. In the next 3 years, I'll open 300 stores. So we would keep expanding in distribution also. We will keep expanding in EBOs also. We will keep expanding in large formats also. We will keep expanding in e-commerce as well. So, it will always be a well-rounded sort of this thing. So hence, I don't see much shift or much changes happening either in the channel mix and hence subsequently even in your margin mix.
Okay, but at a higher scale and with your own manufacturing, I think you said about sustaining the margin. I mean, but wouldn't at almost double the sales, shouldn't the margins be expected to go even higher? You know, like from.
I wouldn't. मैंने ये शायद से पहले भी आंसर करा है that when you're targeting a 15-20% kind of a growth, you cut down, आप 20% की growth कर रहे हो, उसमें ना it's a very natural growth. उसके लिए आपको extra efforts नहीं मारने पड़ते. But thankfully, we've been growing at more than 50%. So for that, a lot of things would be required, right? And plus, you're taking new brands, margin structures in the new brands are different. So keeping all that in mind, the guidance that I would want to still maintain is that we will try and maintain our margin structures, rather than me commenting and saying that, it'll improve.
Mm-hmm. And just one last question.
Richa, we'll have to end it here. I think that brings us to the... Hello.
Yeah, I think
let's end the call since we've shot over time significantly. Thank you to all the participants for joining on this call, and thanks to the management for giving us a lot of their valuable time. That brings us to the end of this conference call. You may all log out. Thanks, Abhinav.
Thanks, Vinay. Thank you, everyone. Bye.